Hello, folks, and welcome to this week's first commentary. I mean, I it's kind of like amusing, at this point, trading forex. Really, for me, it's completely amusing because, um, it's as though these things we talk about every single week, they just seem to pan out, and sometimes they take longer than usual, but eventually markets just pan out, and honestly, I I am always startled when the markets kind of like manipulate because um the more these things happen, it makes me more or less like less emotionally inclined to price action because I can see the markets through the lens of the institutional order flow. I see real time order flow, and whatever happens really intraday, it doesn't just it's becoming something of a nice psychopathic behavior for me on chat. Now just look at beautiful dollar index and look at, can you just simply appreciate the monthly time frame and everything we've been talking about? I mean, at the start of this month, we talked about potentially February being bearish because we were bearish in January and talking about how this gap here has met objective. But we had a tiny little bit of fair value gap on weekly time frame, but we had to adapt to price action, okay? And which is everything really. Now, if we go back to last week's trading, how we talked about um, a number of things. For example, this old weekly fair value gap here. We said if markets closes below this gap, there's a likelihood they return here for resistance and markets continue to deliver sell side, right? And the fun fact is, we had this previous weekly low, this bearish order block, propulsion block, actually, it was a propulsion candle. We had the propulsion candle there, and we simply had this on just just in case the market showed us something here on the daily chart, just in case the daily time frame validates the weekly buys at this level, because you cannot simply discount this level just because of you have your eyes here. So markets would tell you if you're going to utilize this level, and truthfully, thing is sometimes you're going to even take a loss trying to trade off of here, because maybe if markets give some sort of signal that you're going to be buried from here and you're going on the trade, and trust me, is what the risk, because sometimes you just need to put something on the market. Okay, you need to put a skin in the game. You need to put your skin in the game. Simply, it happens. There's some weeks that you want to be risk on, and you are going to make decisions like that, not based off the fact that you want to form or anything. Something probably aligned on the lower time frame chart, and you want to go in there, you want to put skin in the game, and you want to determine if the market is going to give you that same feedback. All right, and if that doesn't happen, that pushes you on the conservative side, so you are now waiting for all parameters to be met. Now, for me, I'm a very practical person, and most of the time whenever I talk about markets, I basically do not like talking about markets in hindsight. I don't like saying anything vague online so that I can come after and say, oh, that's what I said, that's what I meant. It doesn't make any sense. It shows character, and I'm not a dishonest person in any way, and I don't think I want to have dishonest people around me. I don't know, I'll easily just delve into worldview and stuff, and that's not my interest. Okay, I try to separate my own philosophy from trading. Just come here and talk about trading and trading alone. So about last week, I think I did an online commentary on my Twitter account, and absolutely phenomenal. Let's check. I have it here. So I think it started with this when I tweeted on my account, of course, 4 a.m. wasn't exactly 4 a.m. This 4 a.m. New York time. That's about um 10 o'clock in the morning, West African time. So I was like, damn, Forex is so distasteful. I mean, look at the supposedly obvious bearish one-sided week we were anticipating on dollar index DXY. Just messy, simply. Again, bias was obvious, so you get the hint. And most folks understand here on Twitter that I always talk about periods when bias is obvious, and when bias is obvious, sometimes or most of the times, um, if you're right, the market tends to be in consolidation. If you're wrong, that's I'll try to reverse some stuff. You understand? And I was speaking in a group chat with my friends, with my partners, because they're modern friends, right? And I was talking about how we should be conscious about a run above previous highs at key time of day. And I was talking about, since they're bullish above the Tuesday's new day opening gap, because I made a correction here. It wasn't new week opening gap. It's Tuesday's new day opening gap, because I wasn't training on Monday. So in my subconscious, me going in on Tuesday felt like the start of the week. So that's what I was calling the new week opening gap. It's just a subconscious thing. And I was like, since we're trading above the new week opening gap, it's bullish intraday. But then there's the weekly inversion fair value gap. The weekly gap, I showed you that they could likely return to for resistance, right, on the weekly chart. And because we kind of like consolidated, because the previous weekly low bearish order block was around here, so market was consolidating here and made a new high, and we were trading above this gap. All right, so this only mean, because if you look at it here, we're trading above this gap, so this only mean that okay, currently the dollar index is bullish on the intraday time frame, because this is also a market review. And most of the times I don't spend time in the commentary doing market reviews, because if I didn't put a chart outside, I don't want to speak much about it, because I feel like if I didn't talk about it in real time, there's no way I qualify to speak about it after the fact. You understand? So right now we have content to talk about, because I literally put it outside on Twitter. So I'm like, but then there's the weekly inverse fair value gap above the overnight session highs. Overnight session highs is what I call, the Asian range. Or the Asian range is what I call the overnight session highs. I really don't like mentioning the Asian range, because it's usually not always in a range. Do you understand? So overlapping some premium daily fair value gap. So I'm looking at the possible run on liquidity into the weekly inverse fair value gap to set the stage for a turtle soup. All right, so that's the whole narrative. The intraday time frame being bullish, and markets could reach for the weekly inverse fair value gap, because if the intraday chart weren't bullish, there's no way I'll be having any expectation that markets could trade into the weekly inverse fair value gap, right? And I'm mindful of the fact that a closing basis below Tuesday's new day opening gap before this happens, that means if the market sells off and closes below here, instead of running into buy side liquidity here, invalidate this expectation, and we'll have to adjust the price action. Okay, trust me, Severance is a very good movie. so yeah, I need to check if I can't even recall if my OBS is running. Okay, so I was talking about this weekly inverse fair value gap, and let me overlay this on the daily chart or the lower time frame chart. Okay, and I was talking about the weekly inverse fair value gap, and this was the market trading, showing run buy side liquidity here, showed fake sponsorship, because this is fake. And you might be forced to engage here. Personally, I did engage here. My trade was profitable, and after all, I got stopped out, and I ultimately, that's when I had to adjust, because on during the commentary I was talking about the possibility that dollar index be indecisive on Monday, and whenever I say indecisive Monday here, and market run previous highs, I want to go in first. So I had that set up. I think it was USD CHF. Oh, okay. Oh, okay. I think we collapsed USD CHF because I've had last week. I had lots of experience, to be honest. I did lots of executing last week, so I think I'm having a mix. So, you know, and after this price action, it was obvious the markets were unwilling to sell off. And that's when I was talking about dollar index being bullish on the intraday chart. It might not seem bullish to a regular person, but it's bullish because we're trading above this opening gap. Okay, the market is showing respect for this and they're trying to stay above this, so it's bullish. And if we have another high time frame level, because we pointed out two levels on last week's commentary, the weekly low and the weekly inverse fair value gap. Now, believe me, if you haven't watched the commentary, I think you go back and watch it so you can appreciate this lesson even more. And this became the draw on liquidity. And now that this is a draw on liquidity, not the high time from institutional order flow, because high time from institutional order flow describe longer term trend. That's what high time from institutional order flow means. Now, drawn liquidity could be in line with the high time from institutional order flow. For example, we're bearish on dollar index, and this week simply we want to see dollar index reach for new weekly lows, right? And the previous weekly low would be the draw on liquidity, which market has essentially met very early on this morning. And that's drawn liquidity in line with institutional flow. Sometimes the drawn liquidity could be a run into an internal range liquidity pool, such as a fair value gap, an inverse fair value gap, just like this, and this becomes a drawn liquidity. This doesn't define the high time from institutional order flow. But if you want to look at it from the lens of daily order flow and stuff, then you can make an argument and say, okay, fine, that's the intraday flows and stuff like that. Still makes sense, but you'd have to put it in in context. So back to the dollar index. After making the commentary on Twitter, and simply we had that play out, and and then I was also talking about yes, on Wednesday, that was when the market already traded here, and started to deliver sell side during the overnight session. And I was trying to update the community, about my thought process on dollar index, and talking about how we saw bullish dollar prices into Tuesday's high. Okay, that's the overnight high, session high I was talking about. The weekly fair value gap I was talking about, same chart here. Okay, and as expected, of course, and rejection from the weekly inverse fair value gap at the rejection from the weekly inverse fair value gap yesterday at settlement. Okay, yesterday's was a mistake. Yesterday at settlement, because this was yesterday's price action. Then that was on Thursday morning, if I'm correct. Yeah, Thursday morning. And yesterday market rejected off. We are going to check it on the daily time frame now. You're going to see. So then again, I said my expectation would be to see the 4-hour candle close below the level that's below this level. I want to say 4-hour candle close below here, and when that happens, it's going to validate a change in state in delivery. So this time around, we now have the daily time frame, because this rejection on the daily chart from here, and the 4-hour time frame closing below here. This is the 4-hour changing state in delivery, meaning from a buy program, a 4-hour close below this low would turn the 4-hour time frame into a sell program. That means the 4-hour time frame is aligning with the daily chart, and the daily chart, which is aligned with the weekly time frame, the weekly bias, which is what bearish for dollar index. And under this narrative, I was talking about bearish DXY, because I talk in plain terms. I'm not trying to be vague or anything. So it's very, very clear. My position is always very, very clear. And if satisfied, okay, probability. If satisfied, because if it's not satisfied, I would not be going in. I won't consider any setup. I remain on sidelines. Because if this is satisfied, I'm going to be aggressive because I think it's high time we see the dollar index trade lower. Really, like really, let's be honest. It's high time we see this boy trade lower, and I can better align during the New York session. All right. So that was my thought process pre New York session, and we saw how during the New York session. This is 9 a.m. This will be about 10 a.m. New York time because I'm not tweeting from New York time, really. Anyways, so this was the market closing below here, validating a bearish dollar index. Obviously, this is the drawn liquidity first, right? This is the drawn liquidity, and it's aligning with what we think is the high time from institutional order flow. And during the New York session, market offered setup to draw here, but this is not enough, okay? Because there are some folks on Twitter, absolutely phenomenal. I like this account, and they just come online after talking about everything you're saying. They just take 20 pips, and I just feel I can do more than 20 pips, really. And I'm pretty sure someone who doesn't come from money, who thinks trading is going to change their whole career and your family, I don't think they're aiming for 20 pips. And I assure you, the trading dream is real. It's real if you can fight for it, but you're going to sacrifice a lot, like a lot of things to prove to yourself that you are what's the word? You are qualified to really be successful trading, because it's going to test you in many ways. There are periods when you tell yourself, if I knew, if I wish I knew this 6 months ago, I wouldn't have lost that account. Trust me, you're still going to lose that account. In new knowledge and understanding, you're still going to lose the account. Now, it doesn't mean you failed. No, that's not what it means. Because the best trader in this world is in that person, that very inconsistent person, that very indisciplined person who doesn't even know how to wake up on time to look at charts, or the person who foremost, the person with all of those habits, that's the best trader in the world. And I'm speaking to you directly, really, because that's how I see myself. I see myself as the best trader in the world. I don't think anybody can do the things I do in my position, really. And I really don't like talking about my personal life, especially to strangers online. I'm not comfortable doing that. So that's why I really don't share much. But I think we can all be whatever we think we are, really. So enough of story. I think I'm going into story mode, which I always try to avoid. So I want to see Tuesday's new opening gap fill for support. That's this gap, because we've seen markets stay above here all week. So now we want to see fill for support, offering more sponsorship resistance in sell side of the curve. So what that tweet really is talking about, which I'm going to show here, and we'll also delve into it in the commentaries, seeing how it feels. But not just that, if you check the 30 minutes time frame, you can see how the market closed below this gap here, but instead still made a rejection here, offering another opportunity for a setup, because this is another opportunity for a setup. That's the return back inside here, and then market failing. Okay, so one might think, I think it's offering, going for support, and it fails. And you can see this bearish order block forming exactly after the market fails here in the Tuesday's new day opening gap, and this bearish order block is high probability. Okay, and that's one of the essence things that would facilitate a new pyramid entry here. All right, so if we look at dollar index today off of the daily time frame, because already we've established, we've established the weekly bias many times, okay, we've established the weekly bias, and basically I really don't like taking off the key levels here because they're pretty important that we leave them on, especially how depend during the week, so that you can manage your expectations. If you take them off, something could happen probably during the session and you just miss the detail because they were in there. So we have them. So now I don't think it's pretty important, because if the weekly bias is bearish and already we're seeing Monday, that's the overnight session, the Asian session establish order flow, it only means that you can look at probably the New York session, because but simply now markets has hit higher time frame objective. If we look at the monthly chart, okay, we haven't traded there, because there's something you want to see, because there's this monthly fair value gap is something to note. I think this is the drawn liquidity, because I think this is the last this is the last week of trading in February. Yeah, I think so. Yes, this is the last week of trading in February, and the anticipation. Whoa, spot on, really. This is the monthly fair value gap. That's this swing low here, and if we align it on the daily chart, exactly. Whoa. So we have sell side liquidity pool here, obviously, and this is the drawn liquidity. We've been talking about this being the drawn liquidity for weeks now, and we have Monday, that's the Asian session, establish the weekly buys and making London session low probability. Really, I would not want to engage in London session, because we traded previous days low and stuff, so I want to just remain on the sidelines and just focus on the New York session today, because right now we're seeing that weekly bias being established. That's the difference, because there are periods on Monday, like this Monday here where we have bank holiday, and you want to wait on Monday. It's different from this kind of Monday, because this Monday is simply a continuation of the order flow that was supposedly unestablished on Friday. And Friday, believe me brother, Friday was a mess. And you see, this is why I don't like dropping charts until markets open, because if you check Twitter, for example, a lot of folks are talking about potential markets trading to this high, sell off, trading to fair value gap, sell off, and all of that. It's really not difficult if you can just wait. And folks like that, when the markets now opens, their thought process and expectation is warped already, and they're beginning to think, oh, I think market will hit here and go up here first, then sell. It's now your will against the market. But I don't do it that way. Instead, I look at the weekly time frame, identify key levels, and mind you, currently on the weekly chart, we just keyed off of a weekly key level here and here. So there isn't exactly a weekly level I can pinpoint, except the markets just show me that we're going to trade off of the last week's range. So my only range I'll be looking at for this week's trading would be between last week's range. So I know that, okay, somewhere between last week's range, the market is going to establish the weekly bias, and I'm going to trade off of the daily range of that daily candle that established the weekly bias, and we are having it on Monday. So you see, I'm not necessarily forcing my will, and trust me, there was something I talked about, Tuesday's gap. All right, so look at Tuesday's gap. Check my Twitter. Yeah, I said something here. I want to see Tuesday's new day opening gap fail for support, consequently offering more sponsorship and resistance in the sell side of the curve. All right, and you can see after we had a retest, there's a difference between a retest and a return into a level. So on the 30 minutes chart, we had a retest. Okay, that was a 15 minutes. Okay, I think that was a 15 minutes chart time frame, except I'm looking, yeah, that was a retest. Market closed below, formed the bearish order block and made a retest. But we now had a return back into. And the most distasteful thing on Friday, because I participated in price action Friday, and it was crazy. Friday was crazy. So you can see dollar index, failed to run above this high, and that wasn't salient in Euro USD. Euro USD just traded below this low here for no reason. Euro USD traded below this low. I mean, I think I was on this bullish trade, because I wanted to engage for a continuation. So I was, New York session, the news rallied up. I think my stops below here, and Euro USD just went below this low, started consolidating, and with everything going on, I cannot hold the trade throughout the weekend, because then the daily time frame wasn't validating any continuation until I had to wait. So I had to close up the trade in a loss, and just wait for this week's trading. So you can imagine the awful manipulation in markets. I mean, the manipulation is real, and see how markets are just running quickly. Like, when did this happen? I just slept. So that's dollar index. That's foreign currencies for you. Very manipulative and very distasteful, really. So we have this same new day opening gap. This old gap, the market, this one here, market trading to it for resistance here, market trading to for resistance here, and you can see the phenomenal delivery. Anyways, I still have my old trades running from here. I still have trades running, and if we're not talking about the New York session on Thursday, when I was talking about sponsor 8:30, so you can see the 8:30 market. No, it was 8 o'clock. I think, yeah, Euro USD would do it better. Yeah, 8 o'clock we had sponsorship, and markets created this fair value gap at 8:30. So entry at the gap, and holding for longer term price objective. So that's the summary for the market review for last week's trading, and it was really beautiful to see how this market will play out regardless of the intraday manipulation. So we have the market show sponsorship today in line with the weekly buys. Obviously, the buys we've been holding on to for weeks now, since the start of January. I don't know, I'm just getting clumsy this morning. So yes, so if Monday closes bearish, like a strongly bearish candle close, preferably below Thursday's low, okay, so we want to see the strong bearish close below Thursday's low here. And if Monday closes like this, possibly we are going to have to reference Monday's dealing range for a setup on Tuesday, except if the New York session is offering anything. But now this is the whole daily range, and I'm usually not comfortable in forex trading after the daily time frame has established this much, because forex is so annoying, and the markets could really utilize this level here as objective, this candle here. In some school of thought, they call it demand. Okay, this level, that's about the main threshold of this daily order block. So this daily order block, the main threshold, about the main threshold of it. So markets could get here, and that's the end of the daily range, because like I said, the daily, the weekly range, these things are capped. And this week we just have about a one shot, one kill into objective now. That's about 70 pips into objective now. That's what we have. We have about 70 pips into objective. So we have about 7 pips into objective. Imagine having to work all of these ranges for weeks. Now we're left with 7 pips to scavenge. That's classic forex. So we look at euro, and I mean, we're bullish on euro USD, and obviously on the weekly time frame, markets are currently trading above the previous weekly high. And if you're bullish, you want to see price. That's an indication that the market is bullish, because if you notice, for every bearish week, markets will run below the previous weekly low, even if, of course, they reject, but make a continuation, reject, make a continuation, reject, make a continuation, and reject, close bullish, showing inside a high time frame key level, showing sponsorship. Okay, this in itself qualifies bullish, because the high time frame institutional overflow is bullish for foreign currencies and stuff. So this week we already see signatures that the euro USD, euro dollar is bullish, a run above previous weekly high, which is a very significant delivery. And on the daily time frame, on the daily chart, we can see the market form or create a daily bullish order block. So the daily order block is something we can utilize for Tuesday's trading. It depends on how Monday closes, because Monday has the potential to run through this high. Okay, or probably markets return back for the New York session and make a retest here. That's something. So yeah, we'll just see. This week is pretty straightforward, but you can see, because it's pretty straightforward, the markets are running so hard. They're trying to run quickly from everybody, so nobody engages, and that's pretty lame, and they're very petty, and that's why you'd have to be very careful, really. So I hope you found this one insightful. I would see you in the next.